Ladies and gentlemen, good afternoon and welcome to Sri Lotus Developers and Realty Limited's Q3 FY26 earnings conference call. Before we begin, I would like to remind participants that this conference call may contain forward-looking statements about the company, which are based on beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantee of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then zero on your touchtone phone. Please note that this conference is being recorded. With this, I now hand the conference over to Mr. Anand Pandit, Managing Director and Chairman of Sri Lotus Developers and Realty Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and a very warm welcome to the Q3 FY26 earnings call of Sri Lotus Developers and Realty Limited. Joining me today are our CEO, Mr. Sanjay Kumar Jain, our CFO, Mr. Rakesh Gupta, and our investor relations advisors from SGA. Our investor presentation has been uploaded on the stock exchange and on our website. We hope you have had a chance to review it. Let me begin with a brief overview of the market environment. The Indian government continues to focus on improving demand and consumption in the economy. The recent Union Budget has emphasized higher infrastructure spending, better connectivity, and policy clarity, which together are supporting investor confidence and long-term growth in the real estate sector. For the quarter ended December 2025, I am pleased to share that pre-sales for the quarter stood at rupees 376 crore, registering a strong growth of 247% year-on-year. Collections during the quarter were healthy at rupees 119 crore, reflecting sustained customer confidence and execution momentum. During the quarter, we launched Project Varun in Bandra, which witnessed encouraging traction, with 19% of the carpet area sold in the launch quarter. Customer response remains positive, supported by strong inquiries. Our recently launched projects, the Arcadian in Juhu and Amalfi in Warsaw, continue to witness healthy demand, and within just 4 months of launch, 34% of inventory at the Arcadian and 45% of Amalfi was absorbed, reflecting the strength of our product positioning and demand in our core micro markets. Construction at Lotus Aquaria in Prabhadevi is progressing very well, and for Lotus Celestia in Warsaw is commencing in this quarter. These ultra-luxury developments are located in some of Mumbai's most coveted micro markets and will further strengthen our positioning in the premium residential segment. We plan to launch both projects by March 2026 with a combined revenue potential of more than 2,000 crore. These launches provide strong visibility and reinforce our confidence in achieving our FY26 pre-sales guidance. On Lotus Trident, our greenfield commercial project, certain regulatory and statutory approvals are currently underway, and its launch is expected in Q1 FY27. We continue to strengthen our footprint in core micro markets while selectively expanding into high potential locations such as Bandra and Prabhadevi. The scale and quality of our development pipeline clearly underscore the strong brand acceptance of Lotus Developers. During the year, so far the company added 8 new projects to its portfolio, which includes 3 projects in Bandra West, 4 projects in Juhu and Andheri West micromarket, and 1 in the GIFT City area of Gujarat. With this, we have added additional GDV of about 7,500 to 8,000 crore in our growing portfolio. We remain in active discussions with multiple societies and expect to finalize further projects addition by the end of the year. Our ongoing upcoming pipeline comprises 20 projects, 16 residential and 4 commercial, with an aggressive GDV of approximately rupees 16,000 to rupees 17,000 crore. This translates into nearly 3.2 million square feet of sellable carpet area to be realized by FY31. Notably, 15 of these 20 projects are redevelopment-led and 4 are joint development projects, reinforcing our core focus and competitive strengths in this segment. Given this project mix, we are confident of sustaining PAT margins in the range of 25 to 30%. As we look ahead, our focus remains firmly on disciplined growth, timely execution, and scaling the Lotus Developers platform into a resilient long-term value creator. With that, I now hand over the call over to Mr. Sanjay Kumar Jain, our CEO, to take you through the financial highlights.
Thank you, Anand sir. Good afternoon all. Let me now take you through financial highlights for quarter 3, that is 9-month financial year 2026. As highlighted earlier, during Q3 FY26, we launched one project, Varun in Bandra, in November 2025. The project recorded booking of 52 crore and has an estimated GDV of rupees 430 crore to 450 crore. We expect to launch 2 projects in Q4 FY26, Lotus Aquaria, that is in the Prabhadevi, and Lotus Celestia in Warsaw, with a combined revenue potential of more than 2,000 crore. Moving to consolidated financial for Q3 FY26, pre-sale stood at rupees 376 crore, growth of 247% year-to-year. Revenue stood at rupees 224 crores, growth of 93% year-to-year. Collection for this quarter stood at 119 crore rupees. EBITDA was rupees 79 crore with a growth of 29% year-to-year. EBITDA margin stood at 35.5% for the quarter and 34.5% for 9 months. Profit after tax was rupees 70 crore, registered 37% year-to-year growth. Expenses towards ongoing and upcoming project stood at 57 crore in Q3 FY26. For 9-month financial year 2026, pre-sale stood 695 crore, growing 117% year-to-year. Revenue stood rupees 461 crore. Collection for 9 months ended December 2025 was rupees 294 crore. EBITDA was rupees 159 crore and EBITDA margin stood at 34.5%. Profit after tax was rupees 142 crore. Expenses towards ongoing and upcoming projects stood at rupees 332 crore in 9 months financial year 2026. Net cash as on 31st December 2025 stood at 845 crore rupees. During the IPO, we raised 792 crore rupees through press issue, and net proceed post issue expenses was rupees 732 crore. We have deployed total funds amounting to rupees 200 crore till 31st December 2025. With this, I would like to open the floor for questions. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and then 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, to register for a question, please press star and then one. Our first question comes from the line of Ankit S. Mehta from Wellworth Share and Stock Broking Limited. Please go ahead.
Thank you for the opportunity, and congratulations on the good set of numbers. So despite slowdown, as is evident that company has performed very well in Q3 versus peers. What is the outlook for Q4, and is the management confident on achieving the FY26 guidance?
Yeah. So, Ankit, we are very confident that whatever the guidelines given, we are able to achieve the same. And we are looking good response from the also from the Varun that we have already launched, and some query already express of interest received for the to be launched project. We have already received from some of the customers.
Yeah. Thank you. That was also my side.
Thank you. The next question comes from the line of Mohit Surana from Monarch Network Capital. Please go ahead.
Thank you for the opportunity. First of all, congratulations on the good set of numbers. My question is more on the broader industry, like given the intensified competition for quality redevelopment assets in Mumbai, how do we differentiate in acquiring new societies? And what is our visibility on adding more projects to the pipeline over the next 2-3 years?
Well, thank you for your question and joining this call. First of all, real estate is all about trust and quality, and that is what we have proved till today, showing our legacy of faster construction with ultra luxury manner. We complete the project and full satisfaction of our clients. This is the mantra we are working on. Because of that, and our proven track record, lot of societies, they are coming to us, even though they might have chosen or somewhat chosen somebody else. So getting the new society is not a tough job for us. So that is one. Second, in ultra luxury space, in redevelopment, I would say I don't know which other companies are operating, but we are very uniquely positioned ourselves, and everyone who is going for redevelopment, they want to shift from their dilapidated kind of building to ultra luxury only. So when they see our redeveloped properties, generally we get the preference in that. And also on sales side, I mean, this was acquisition side. Sales side also, we get excellent response because our product is positioned as ultra luxury product. So we are very confident for the next few years we'll be able to perform.
So, sir, apart from the existing pipeline of projects, do we have visibility?
Sorry to interrupt. Mohit sir, your voice is sounding a little muffled. May I request you use the handset if you're using any other mode?
Sure. Am I audible now?
Yes, sir. This is much better. Please go ahead.
Yeah. Perfect. So, sir, apart from the existing pipeline of projects, do we also have visibility of new projects over the next 2-3 years? I mean, can we continue adding on more projects just like we did in FY26?
Yes, definitely. And that would be a regular process actually, because that is what the business cycle for us. In this financial year, we have added almost 8 new projects, including Gift City, one of the projects in Gift City. And we are already in regular talks with many societies. So every quarter we will be adding some new projects.
And sir, considering the aggressive number of launches that we have planned, has there been a change in our strategy in terms of boosting our execution capabilities?
So execution capacity, I mean, as we are growing, we are having more, I mean, focus is on HR, having more experienced people. We are adding to our staff.
Understood. And sir, would there be, I mean, until how many years do you think the current level of cash that we have on the books is sufficient to achieve our guided objectives?
So, Mohit, we have currently the 845 crore is the net cash. That will be sufficient for the technically 8,000 crore GDV. But because of the cash flow and working capital flow, so we are easily achievable around 17,000 crore project we can do. And whatever this cash balance, that will be the routine process, and majority of the IPO proceed will be the next 1 year we will able to deploy that.
Understood, sir. So that's very helpful. That's all from my end. If I have any more questions, I will fall back in queue.
Thank you.
Thank you, sir.
Thank you. Before we take the next question, a reminder to all the participants, if you wish to register for a question, you may press star and then 1. Our next question comes from the line of Ayush Sabu from Choice Institutional Equities. Please go ahead.
Yeah, I just want to know for the future GDV addition, like, the projects in the future which we will not be doing through redevelopment, probably through joint development. So do we foresee taking any debt in the future, like after 2 years probably, since we already have a strong balance sheet, but for non-redevelopment projects, do we see any debt being?
So Ayush, currently, as I explained you, we have the sufficient cash balance, and there is no requirement of the debt. But in the future, if there is any good project and if anything required for the balance sheet also, then we have the two options. Either we can have the QIB or we can take the debt. But looking forward to next 2 years, I don't think we required anything from both of this.
Okay, thanks, okay.
Thank you. Our next question comes from the line of Aniket Madhwani from Step Trade Capital. Please go ahead.
Yeah, hello, sir. Am I audible?
Yeah, Aniket.
So my question was with regards to the collection. So despite growing pre-sales number, the collections are still at low. So can you please explain the reason behind it? Because in last quarter, you have said that projects were recently launched, so the collection has been pushed to Q3 and Q4, but still the numbers are very much low. If we see the pre-sales number.
Yeah, Niket. So Rakesh Gupta here. So as you already clarified that since if you see few of the projects in the last 4 months, and in the initial stage, generally collection is on lower side because collection is generally linked to the percentage of completion achieved on the slabs wise. So the collection will definitely we move forward to the next quarter as and when we achieve more and more completion level. So in the initial 2 quarters, we have a lesser cash flows from the sales we done. Then going forward, whenever the project reaches a next level of construction, then we collect more money.
Okay, and what number are you targeting in FY26 in terms of collection?
So we already done 294 crore of collection in the last 9 months. Since it's a very dynamic number, since we are poised to launch 2 more projects in this quarter, this collection number would be definitely higher than what we have done in Q3, in Q4. But exact number can't be anticipated right now, but we are very much sure that our Q4 number of collection would be much higher than what we have done in Q3.
Okay, got it. And out of these 20 projects which are ongoing, 16 are residential and 4 are commercial, right? So out of these 20, how many are redevelopment projects, and could you please bifurcate?
So, Aniket, this is Sanjay Jain. So, out of 20, only one is the greenfield. The balance 19 either joint development or redevelopment. So, I think three.
So
Four projects are joint development and 15 projects are redevelopment.
15 are the redevelopment projects.
15 redevelopment, 4 joint development, and 1 greenfield owned project.
And any guidance from you in terms of top line for FY26?
So FY26, we already achieved 460 crore of revenue, and we are on the track to achieve whatever we have guided. Our pre-sales, we have guided in the range of 1100 to 1300 crore, and we are on track to achieve that pre-sale number. And revenue also within that vicinity which we have guided.
Sorry, please, can I have the number in terms of percentage?
Of the revenue or pre-sales?
Yes.
So pre-sales, I said that we have guided that 1100 to 1300 crore was our guidance number, and we are on track to achieve that number. We have already done pre-sales of 695 crore in 9 months, Q3.
Okay, got it. That's it from my side.
Thank you.
Thank you. Participants, you may press star and then 1 to ask a question. Our next question comes from the line of Kapil Agrawal from Daksh and Associates. Please go ahead.
Yes, good afternoon, sir, and congratulations on the very good set numbers. So my first question is regarding that how we recognize revenue. So we are on the percentage of completion method, or after on occupancy we are recognizing the revenue?
Yeah, we are on percentage completion method. So as per the project progress, we recognize the revenue.
Okay. And the second thing is that in this quarter and last quarter, our operating margin is approximately 30, in the range of 30 to 35%. Last year it was above 50%. So what is the reason this margin is being reduced?
Our EBITDA margin was in the range of 35% here and there in the last 9 months. Earlier, in the last year, the margin was on a little bit higher side, which we have explained in last quarter also, because of one particular project where we have witnessed a good appreciation in rates, while our cost was on lower side, where the project was acquired during COVID period. So because of that appreciation, the project margin or operating margin was on the higher side. But we are expecting to retain our EBITDA level in the range of 35 to 40% going forward.
Okay. And what is our expected this EBITDA margin going forward?
Similarly, so as we have achieved 35% in this this 9-month period, we are expecting to remain on that level, at least for next year.
For we can say all like for redevelopment and JDA for both kind of project?
Yes.
Okay. Thank you. That's it from my side. Thank you.
Thank you.
Thank you. A reminder to all the participants, you may press star and then 1 to ask a question. Our next question comes from the line of Darshan Parekh from PGE Industries Private Limited. Please go ahead.
Yeah, hello. Hi, this is Darshan Parekh speaking. Thank you guys, and congratulations on the good numbers. Sir, I just wanted you to give some more specifics and more details about some of the projects that you said during your talk. One was, I think, the Arcadian, and the other one was the Amalfi. You gave numbers of 22% and some 82% bookings. Just some more specifics on how the progress is going in these projects, and when do you see them getting completed on time, delays, and what is the general outlook of the market for you in terms of luxury projects? Yeah, thank you.
So we launched both these projects in Q2 this year, and the project construction of these both the projects are progressing very well, and we are on target to complete Arcadian in next financial year and Amalfi in mostly Q1 of FY28. So this was we have already as per our expectation only.
Okay, thank you.
Thank you. Your next question comes from the line of Mohit Surana from Monarchs Network Capital. Please go ahead.
Just one general question on the completion timeline. Once we have the development agreement, how long does the RERA allow us to complete the project? Generally speaking, I understand it can vary project to project, but generally, is it 3 years, 4 years? If you can just give some insights on that.
Hi, Mohit, this is Sanjay.
Yes.
RERA is not giving any timeline for any project. It is depending on the developer is the choice to out. So what happened? This is the negotiation between the society and the capability of the execution. Depending on that, we give the RERA date. So some developer can give the RERA date for 3 or 4 years completion. Some is giving the 7 to 8 years also. So it is depending on the only developer. RERA don't have any guidelines for the completion of the project.
Understood, sir. And so for us, our projects, the completion timeline is basically 2 to 3 years, generally speaking. Is that correct?
Yes. So generally it's 2 to 3 years. In case of some big project or there is the basement, then it will take 6 to 9 months the additional.
Understood. That's helpful, sir. Thank you.
Thank you. Participants, if you wish to ask a question, you may press star and then 1 now. Our next question comes from the line of Satyen Dodia, an individual investor. Please go ahead.
Sir, company is thinking about near-term paying dividend.
Sorry to interrupt. Satyen, sir, your voice was not good audible. If you can please use the handset.
Sir, company is thinking about paying dividend in near terms. Hello?
We are going to propose to our board and general body about dividend. So we will have a dividend policy in very near future.
Okay, sir.
Satyen, sir, you have any further questions?
No, sir.
Thank you so much. Our next question comes from the line of Aniket Madhwani from Step Trade Capital. Please go ahead.
Yeah, thanks for the opportunity once again. So my question was, according to your revenue growth guidance, so it will be implied around 498 crores to achieve in this quarter. So could you please explain how the company will, achieve this level of revenue in terms of project completion, construction?
So, Aniket, what happened? So we have the 3 set of the projects. One is the completed project, one is the ongoing project, and third is we are aiming 2 new projects during this quarter. So our expectation is that for the pre-sale guidance, we are approximately 200 to 300 crore we can achieve in this quarter from the new 2 projects. And from the ongoing project, maybe we are also around 250 to 300 crore we can achieve.
Okay. Yeah. And the company will be maintaining the same mark, right? 35
Yes.
to...
Correct. That we have given the guidelines that for the next year also we are given.
Okay. And any new projects that are in pipeline? I mean, are you planning to add any new projects in coming quarters?
Yeah, as I explained, Anand sir, that this is the routine process. We have the talking with the multiple society. So we are getting every quarter we are getting something. So in this quarter also we are talking some society. So once that will required, we will intimate to your exchanges.
Okay, got it. Yeah, thank you.
Thank you. Ladies and gentlemen, due to time constraints, we'll take that as the last question. I now hand the conference over to the management for closing comments.
We thank everyone for joining the call today. To conclude, the quarter reflects not just strong numbers, but the structural strength of our platform, driven by disciplined capital allocation, consistent execution, and a deep understanding of our core redevelopment markets. As we scale our presence in Mumbai and take our first step into a new market like GIFT City, our focus remains clear: to convert our robust pipeline into timely cash flows and sustainable profitability. We remain committed to our asset-light business model, building high-quality assets, strengthening stakeholder trust, and creating long-term value through cycles. Thank you for your continued confidence and participation. For any further queries or clarifications, please feel free to reach out to SGA, our investor relations advisor. Thank you once again, and have a good day.
Thank you. On behalf of Sri Lotus Developers and Realty Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.